Hello, viewers. I'm Hitesh Gajaria, Chartered Accountant, and I'm very happy to be here on this platform of Bombay Chartered Accountants Society. BCAS has, for the past 75 years, been building a voluntary, principle centered society of professional chartered accountants, and today I'm happy to say we are 11,500 chartered accountant members spread across more than 400 towns and cities all over India. Today, it's my good fortune that I have our past president, chartered accountant, Mr. Pinakin Desai, a person who I have known courtesy BCAS for the last 3.5 decades. I tremendously respect him as being a professional at the zenith of his craft, taxation, for the past more than 4 decades. And I deeply admire him as a human being who brings out the best in me as well as in every other person who interacts with him. Today, we are going to speak about international taxation, the journey over the last 5 decades, and what's to come in future. Welcome, Pinakin Bhai.
Thank you, Hitesh. Yeah. Thanks for very kind words that you expressed. And thanks also to the society for this opportunity which we are enjoying today. You are referring to the journey of the last
Right.
5 decades.
Right.
And as I look back, I find how simple the life was 5 decades back from the perspective of a tax professional practicing the law of taxation in India then. As I recount, it was a golden period. We hardly had to comply with TDS provisions. There was no tax audit. There was no GAR. And if we look at the return of income, it was a very simple form, a 2-page form. And if I wanted to say that I have incurred estimated loss of 50 lakhs of rupees, I could just put down that figure and in 5 minutes time, the return of income would be ready. Now, as compared to that, what we visualize today is a sea change. It proved to be a painful change for some of the colleagues who could not cope up, but by and large, majority of the people could adapt themselves to the changes which took place. When I recount the international tax scenario, 5 decades back, we hardly had any visibility to international tax. Some privileged firms might have clients in the form of shipping companies and a few other foreign companies, but we never heard much about it in public domain. But we look at what international tax today is, and we'll have opportunity to talk about it little further as well. But one thing which has not changed over time has been that in the beginning of my practice, I had to struggle finding out whether expenditure is capital expenditure or revenue expenditure. Even today, when that question is asked to me, I'm not sure whether I'll be able to give the correct answer. Yeah.
Indeed, some things remain the same, even though a lot changes. But what do you, when you reflect back, what do you think was the most defining moment for an Indian tax professional over these 5 decades? What would you say would that be?
Okay. Your reference seems to be to international tax, I suppose. Yeah.
Correct.
Okay. So in the journey of a professional in India and interplay with international tax, we cannot forget the date of 24th of July 1991. Dr. Manmohan Singh, the then finance minister, brought out the budget of 1991. That was the date on which India was left with foreign exchange reserves, which cannot service more than one fortnight of the imports, a very precarious situation.
True.
So in 1991, a very drastic step was taken. First of all, to begin with, during that year, we had 2 successive devaluations. And on 24th July, when he presented the budget, the Indian economy opened up, not as much as we find it today, but quite significantly compared to what the position earlier was. First time, significance was given to the private enterprise. There was a thrust that we should have good infrastructure. We should have technology transfer here in India. We should not be averse to signing technology agreements. FDI was permitted, and there were clear signs of liberalized economy. Maybe there was no option at that point of time, but nevertheless, these were the changes which he proposed. And immediately thereafter, within 2 years, we found that the scenes in India were totally different. On the desk of every chartered accountant, there would be a client where we had to sort out the international taxation issues. The chartered accountants, to the credit of the profession, took up a challenge. And within 2 to 4 years thereafter, the strong preparations were on. People started talking about international tax as if it is nothing but domestic tax. And I must appreciate the role which BCA played at that point of time in building up the culture. I may make a special mention of Mr. Roy Rohadke, who had access to international tax even then, and he was holding the hands of the members of the society. And of course, thereafter, the members never looked back. But the defining moment was 24th of July.
Indeed. I still remember those words of Dr. Manmohan Singh, unleashing the animal spirits of enterprise, was what he had said. And you are right that it made such a sea change thereafter. And I think you rightly gave credit to the Bombay Chartered Accountants Society. I think the society plunged headlong into, I remember, study circles at first, and then various conferences around tax treaties primarily to try and get to the grips of this subject. When one goes through, let's say, the sands of time, and even then, you mentioned how precarious India's condition was in 91 as a developing nation, and it had to, in a sense, be forced to open up the economy. But since then, this whole discussion around developed versus developing nations, when it comes to tax policies, do you believe that both developing and developed nations have moved in tandem in the same direction, or have developed nations moved far ahead and developing nations are still lagging behind and have a lot of catching up to do? Has the gap widened? Any surprising trends you may have observed when one reflects upon policies of these two types of nations?
When we talk of developed and developing, one is a question of arithmetic, in the sense that how do we classify our nation as a developing nation? Now, in terms of GDP, India may be a very large country. But because of the size of population, when in India and China, we try to spread the income over the population and per head, simple average is worked out, that's where the classification would become relevant. So, significance wise, India in terms of trade would be considered as one of the foremost, whereas we might be lagging behind in terms of the classification. But let's not get into how do we classify developed and developing. But there is some common denominator when we talk across any country, whether in the developing segment or in the developed segment. Everybody wants tax collection. Everybody wants to claim that it is stepping the tax collection in a manner that it's a fair system of taxation that they are adopting. and they are lookout for expanding the sources of collection. I think this is a common denominator. But having said that, the task of developing nations is nowadays becoming difficult, and we'll maybe keep talking about it. That earlier, when we were talking in terms of the brick and mortar economy, then the developing countries had the consolation and the compromise that they will be receiving the factories and the offices which are managed by overseas. There will be people coming over. But with the digital economy picking up, even some of those sources are drying up. So developing countries are evolving a theory, and they believe that international tax collection should be spread in a manner that any country who is contributing to the income in whatever form should get some fair share of taxes wherever the taxes are payable. Income may not be earned within India, but so what? India is providing, supposing, a market. Then a market jurisdiction ought to get a share of the tax which is payable in any country, whether you conduct the business in a digital form or in a non-digital form. They are also on the lookout of how to tax the digital economy. So the UN model, we have Article 12AA which they are proposing, Article 12B they are proposing. Countries tried the digital taxation, diverted profit tax, equalization levy. These are all the means where the digital economy is respected, and yet it opens up a window of a developing country connecting something, payer-centric. So if I am making payment for whatever, then in that case, I must be able to retain some part of the tax. Now, this is the philosophy of the developing country. But it is slightly at loggerhead with the philosophy of developed country. And it comes to prominence when we talk of US as of today. So US has one big beautiful bill act which has been recently enacted. And President Trump, the view that he has been holding is that you levy tax which is in accordance with the treaties. He also has grievance on the way Pillar 2 is sought to be implemented. He believes that US believes in minimum taxation, but it's a minimum tax at the global level, centric at US, so that BEAT and GILTI and other provisions, they ensure that a US company is subjected to tax at a minimum level, but on a global blending basis. Why do you need jurisdictional blending is the objection that he has been raising. He believes that anything which is operating in the name of digital or operating in the name of Pillar 2 is violating the territorial limits. It is extraterritorial. He doesn't want to permit implementation of these items, as a result of which there has been a very big divide as of today between the developed and the developing countries.
So, in a sense, you would say that so long as the ideology of US of there being a global minimum tax, but ironically everything, that entire tax possibly only being collected in the US and not shared with other contributors, if you will, to the value chain, the market jurisdiction being the most notable, where services, technology products, intangibles are consumed and paid for, do not collect any amount of that tax. Which means that today really the not only the developing world but the developed and the developing world is still trying to find some sort of an equilibrium to how to ensure that at least a fair and reasonable basis of taxation is perceived by all the nations together rather than these contrasting ideological viewpoints. Would you agree to that?
Yeah, that's correct. Fine. And that's because US believes that you do find out some solution, but it should not be in the name of inclusive framework which OECD is talking about, but it should be in line with the treaties which are operative today.
Which brings me to the interesting question of tax havens, or rather, that's a word which most tax havens do not want to, that moniker is not something that they like. So they would like to call themselves as global business centers, etc. What do you think is the future for these once so called bolt holes for the ultra high net worth individuals to maybe stash their income? In this world of increasing scrutiny, increasing tax transparency, digitalization, universal widespread knowledge, where do you see the role of tax havens, if at all, surviving or evolving over the next few years or decades?
I would not say evolving. I think, if at all, it would be decaying, we can say. How we look at tax haven, and our layman may have a different perspective compared to a specialist like you. But if I address it from the angle of a layman, there can be three categories of people, three categories of maybe tax havens that we can talk about. One is when I look at India-Mauritius Treaty, as was operative at some point of time, and with regard to the capital gains income, there was scope for double non-taxation. And with light effort, you are in a position to enjoy that exemption left, right, center. So that's, in a way, a limited tax haven for that source of income for people using that treaty.
Right.
Second, there were harmful tax regimes, and they were spread all over the globe. Harmful tax regime is one where you can report your income, but that income did not have been earned within the jurisdiction in which you are reporting. Resources or efforts in the jurisdiction may not have anything to do with earning or accrual of that income. But incentives are given with regard to the reported income, no matter whether it has linkage with the territory or it doesn't have a linkage.
Right.
And the third type of tax haven that people talked about was by the nickname of Swiss bank, where money was deposited. You can go there. The story would say that deposit money, no information will ever come out. In fact, a country like Liechtenstein had a law according to which I was told that if anybody disclosed any information, it was considered to be a criminal act. I think that's what you called a tax haven. But in all the fronts, if you look at, there has been a breakage, and the concept is slowly disappearing. For example, India-Mauritius Treaty and the like of it, after the BEPS section and 90% of the treaties adopting the principal purpose clause within the treaties, it's not now easy to claim any double non-deduction. Second, on the harmful tax regime, we had the BEPS section 5, as you know. 97% of these regimes, after the due diligence carried out by OECD from time to time, have disappeared. So you can grant now an incentive only to the extent income relates to the territory which is wanting to grant an incentive. That's not a fun at all. And when you again come to the last category of the tax haven, as you rightly mentioned, that there is a substantial geopolitical pressure. Treaties have been signed, including by countries such as Isle of Man, where they say we are prepared to share the information, we are prepared to cooperate in tax assessment, tax investigation, in extradition, and there is nothing which in today's world is secret. And a secret cannot remain secret for 20 years or 30 years. Artificial intelligence is now building up a memory where today it will be able to tell me what happened 20 years back. So it's not possible now to hide the wealth in a manner in which one was hiding it earlier. When you look at India, for example, the very stringent measures which India itself has implemented, as a resident, when I am furnishing my return of income, I am called upon to disclose on a year-on-year basis. Am I a trustee of any overseas trust, beneficiary, settler, signatory to any bank account? Have I earned any income outside India? Is there any asset outside India? And this information is getting now built up. India introduced Black Money Act, which is a very stringent and a very novel act, where it now says that maybe I committed some fault 20 years back and it comes to the notice today, then the law of limitation will not apply. I can be taxed today at a punitive rate in respect of what I secreted 20 years back because the information has come to the notice of the government. Now, with this environment, people themselves are becoming apprehensive about what they sweetly call tax havens.
Interesting you mentioned. So I think what comes out as a theme is the focus of almost every country to ensure that transparency and taxation go hand in hand, that taxes be paid fairly in the jurisdictions where the incomes are earned, and therefore some schemes to attract investments by giving generous tax incentives over income which does not even originate in that jurisdiction, etc., are on the wane. And perhaps OECD themselves, once, let's say, a small club of elite countries, having opened up now to more and more surrounding nations which are not of that equal economic standing, took it upon themselves, let's say, at least in the last 10 to 15 years, to champion the BEPS measures, etc. What is your opinion, Pinakin Bhai, on the role that OECD has played thus far, its continuing relevance? It has in some ways set the tone perhaps before US resistance as maybe being the ultimate global tax referee in colloquial terms, if you mean. What is your view on the continuing role that it will play? And if I were to look at the United Nations, and you mentioned some important amendments that they want to propose to the treaties, which may ensure a fairer tax collection in the hands of the countries which are basically the payer countries. Where do you see now both these bodies going forward? What role would they play in shaping tax policies across the globe?
Okay, let's divide this into two parts. One, the philosophy which the UN model is generating, the reason behind it, and then vis-a-vis we also come to the OECD.
Right.
Now, when you look at the philosophy of the UN model, they are taking what they believe to be a realistic stock of the changes which have occurred in the business economy, the way the businesses are conducted. So as we just saw earlier, we had businesses where there were brick and mortar models. the goods were physical goods. We never imagined that goods can be received just by a click here, and that they are just digital goods. So they were all physical goods. If they were physical goods, people had to bring the goods here, manufacture the goods here, trade the goods here. Automatically, people will come in here, offices and factories and people. So you will have a permanent establishment or a service fee. You need a franchisee, so you pay technology transfer, royalty. Automatically, sources opened up and a business connection with India was, say, established. But now goods themselves are no more physical goods.
Right.
Delivery is not physical. Consumption is not physical. I just read the book, I enjoy the movie, that's about all. I don't need a theater for that. Person can sit in a Starbucks shop and carry on his business. He doesn't need anything. Now, UN model believes that with this change, you cannot concentrate only on the treaties that you have signed, and that's why they are looking for the sources by which there can be fair allocation of the taxes. Now, that's one story. And another is the OECD has been consistently working, and your reference to OECD being the referee, etc. OECD in a way has been a very significant and I would say one of the most valuable players in the world of international taxation. As back as in 1963, they brought out their first convention, the model commentary.
Right.
And it is received very well. It has been a scholastic effort on the part of OECD from time to time. It has received accolades from the judiciary of various countries. The commentaries are being adopted and followed in giving effect to international taxation. Then it suddenly received respect and mandate, I would say, from 137 countries, the political heads. They got together and said that, why not we refer to OECD and they coin out the action points in order to ensure that there is no treaty abuse, that there is no abuse of any provision, there is greater cooperation between the countries. So OECD suddenly got a fillip. They very creditably came out with BEPS sections 1 to 15 that we had. Thereafter, it came out with what I consider to be a very novel feature of multilateral instrument.
Indeed.
That everybody thought maybe a year back that how at all you can negotiate maybe more than 2000 treaties. And they signed one document according to which all the treaties stand modified. They conceived Pillar 1, they conceived Pillar 2. So their contribution is no doubt very significant. Biden administration supported it as well. But in today's context, referee, I think no. Number one, UN model itself believes that they have been somewhat partial to the developed countries. That's their feeling. That Pillar 1 is highly inadequate to subserve the need of the developing or the justification which the developing countries have. So they also do not accept OECD to be a referee. And in any case, US has now made it clear, including enacting 899 of one beautiful
Big tax bill.
big tax act. So good a name you can say.
Yeah.
And it says that you please find out some other solution within the range of the treaties. Do not please travel outside the scope of the treaties. You can't make a new law within the existing law. Side by side, please find out the solution.
So it's interesting to note, however, Pinakin Bhai, that though the multilateral instrument was a wonderful mechanism to overcome the difficulty of signing more than 2 or 3 thousand treaties worldwide and entering into all those renegotiations. Do you believe that the OECD somewhat shied away from finally biting the bullet? Because if I recall, the initial dialogue was somewhere, how do we tax digital companies, companies without presence, but yet deriving significant income from marketing, from, let's say, the countries which are called market economies. From there, it seemed to be proceeding in a particular direction, and then suddenly digital companies were given the go by, then all consumer facing companies with significant carve outs for many industries, etc. I don't know whether really, and today, as you rightly said, it's a little bit alienated from the UN model and UN countries supporting UN. Maybe they had hoped to bring US as the most significant economic player on board, but today they are left stranded. It's like a batsman who was scoring very well but suddenly finds himself on the verge of being run out, to use a cricketing analogy. And therefore, what do you believe may be the future in these uncertain times, especially for countries who want to attract foreign investment because now they believe that that is good for their economy? At the same time, they recognize the need to protecting their tax base. So, do you think countries will have to find some balance in both these to ensure that at least, for the future, fair taxes may be collected and economic development also can take place? Some thoughts around that.
No, sure. Let me just go back to what you mentioned about the runout. So, situation has been that US probably made some other country run out. You are right that OECD started with the digital economy. In fact, the foremost web section plan one was on digital economy. They wanted to find some solution because of the way the economic outlook totally changed. Countries started finding solutions, like in India we had the equalization levy, UK had diverted profit tax, 79 countries introduced digital service tax. We had Pillar 2, highly inadequate though some countries consider it to be. But suddenly then US took a view that we will not allow any country to tax a US headquarter company, even in terms of equalization levy or significant economic presence or whatever. So there was a dilemma. Say for India, we had dilemma on equalization levy. If you introduce a levy, it is giving result to you as well for 1 or 2 or 3 years. Now, you cannot make a law in India to say that this law continues. I will tax an European company but cannot tax a US headquarter company. So they had to silently withdraw equalization levy. What was enacted had to be rolled back.
Correct.
Similarly, significant economic presence, the rules are never framed. In any case, the treaties will overpower it. So, you are right that a step back has gone on account of two factors: not finding a proper acceptable solution, plus rollback on whatever people believe to be the solution which can work. Now, in the light of this, when you go to balancing of investment, the question which you raised. So today it's a global village. You can go to any country and carry on your business. You don't need to be in a specific country. So every country is a competitor for the other. And yet you find that some of the countries are making a headway. So even in the midst of the night, if you were to ask a question that for a financial hub, which is the country which is popular, you would say Singapore. For aircraft leasing, you would say Ireland. For shipping, you will say Panama. And for technical outsourcing, you will say India. Now, this means that every country is building up a reputation of its own to develop itself, to stabilize itself. And how possibly it can be done? You cannot prevent entry of somebody into your country, nor can your citizen be denied entry into the other country. But what may happen is that country builds up a reputation, either by providing infrastructure or by, you can say, providing a skill set, the ease of doing business. The government may be very positive in decision making, and you thereby build up a reputation that this is the country where if I go, my life is going to be simple, it is stable, it's going to treat me well. Then people enter and you get a boost to your own economic development. Now, in Indian context, all the virtues or features may not be possible to be achieved. You may not be able to convince an outsider that we have every one of the features that you are looking at. But as a compromise, they might look out for some regimes, like say gift city or special economic zone. So limited to those activities, if you are able to generate a climate or a reputation which works, then that's the way in which you might still be in a position to score over other countries. A lot is required to be done for India, but that's how everybody else will be looking out for.
Very interesting. When you mentioned this, I had read almost 4 decades ago The Competitive Advantage of Nations by Michael Porter, where basically he said that not every country can be good at everything. And today, especially in the context of services, I don't think the government needs to make any extra efforts to promote India as a, let's say, service center of the world or service hub of the world, because the momentum has just now taken off. Interesting, you mentioned Gift City, and I'm sure there are, the right thinking people behind Gift City who want to make in our large nation, let's say, an island of maybe services and especially financial services, so that some other neighboring nations, island nations, or city states at least are given a correct competition so far as those services are concerned. In all of this, the businessman's desire, by and large, and there are exceptions and notable exceptions, is always to pay as less tax as possible. I know from the days when, let's say, I became a chartered accountant, there was a clear distinction between tax evasion and tax avoidance. Legitimately, you could avoid tax. Evasion was always a crime frowned upon. But now, of course, all that is blurred and all nations are engaged in this fight against tax avoidance. What advice would you have for businesses who today, let's say, are already global in some ways? Even notable Indian companies are global. And they have to balance out these evolving changes in the way they shape their business policy, because tax at the end of the day is a real cost and a competitive disadvantage, especially if there is no level playing field in between, let's say, companies from countries where there is a more favorable, let's say, jurisdiction so far as taxation is concerned. What pieces of, let's say, advice you can give? I know it's a very large question, but amidst this tumultuous times, what should a business which is focused on the long term be thinking about when it looks at its tax policy?
I think more than the advice that we give, frankly, to my mind, the businesses themselves are also becoming mature in terms of their attitude to tax avoidance. We have to look at it on the scale of a comparable analysis.
Okay.
So, compared to maybe what was 2-3 decades back, if we find the business outlook today, we do find a certain change. There could be 3, 4, 5 reasons. One is that the rates of taxes over the globe are becoming moderate compared to what they were. Now, when you find that you are operating in a country where the rate of tax is fair, the desire to avoid taxes is to an extent getting reduced.
Correct.
Also because the arbitrage is now getting reduced between the cost benefit analysis which you may conduct.
Correct.
Second, we just referred to a host of factors where with the exchange of information, secrecy going out, you will not be able to keep your cards secret. So the whole world comes to know what taxes are being paid by a significant enterprise and in which particular country. So if you recall, maybe a year or two back, Starbucks, when it had to face the backlash of allegedly being avoiding taxes unfairly, the consumers had a movement that we don't want to enter that shop at all. They boycotted Starbucks to an extent. Maybe they flocked again is a different thing, but that is something which we had not seen earlier. Third, the countries themselves are introducing a certain amount of measures. For example, UK is considering mandatory disclosure regulations, where a tax professional will have to voluntarily inform the tax authority that in the course of my scrutiny I have come across that there is some scheme which is on the borderline of our tax avoidance. You please be aware of it.
Aggressive tax positions, as they call it.
Correct. Fine. You also find that the companies, for example, the listed companies, they have been following a policy and where they make a declaration to the shareholders that we are a company paying fair amount of tax everywhere and that there is nothing that you should believe in our company pursuing any step which is likely to be on the borderline of tax avoidance. Now, tax avoidance and tax evasion, the line in a way is very clear. So people want to control tax avoidance, which automatically will that tax planning also will get a little hit. People want to be cautious enough with PPT, GAR, etc. coming in that no more tax planning the way we were talking earlier.
Interesting. That leads me to this very interesting question of artificial intelligence, blockchain. We saw yesterday Chairman CBDT saying how artificial intelligence is nudging taxpayers to disclose more and more income. How do you see this changing tax compliance, tax enforcement, and even the role of tax professionals as they help their clients to comply?
So there are two areas which are catching fire. So one is the blockchain and the other is the artificial intelligence. Now, blockchain has a definite advantage that as they claim you can't destroy the document, you can't alter the document, you can't backdate the document.
Once done is frozen there for time.
Yeah, that's true. It remains. Whatever
Correct.
that you do, you may have satisfaction you did something, but it's there,
Correct.
unaltered. Now, we can imagine which was the plan of the government at one point of time. I think they are still pursuing that with regard to all the properties which are here in India, the land records, we use blockchain, and that will significantly reduce the number of land disputes which we have in India.
Indeed.
Though currently we find that it's popular more with crypto rather than with any other area, to my knowledge at least. So that's cryptocurrency. Technology had always set in even before artificial intelligence. You might be aware of a very, I would say, thoughtful tribunal decision where the department had done a wonderful job. Somebody was claiming agricultural income as exempt, and he said he is growing crop A, B, C on land parcel A, B, C, etc. The department gathered these satellite images dating back to the last 5 years of those land parcels, and the images showed that there was no agriculture at all. So the technology had already set in.
Right.
And now we have the generative technology coming in, artificial intelligence, where technology is both technology plus human brain itself. As you rightly said, it's going to help all, the tax enforcer, the taxpayer, as also the tax professional. And even on a rudimentary basis, so far as assessing officer is concerned, he will be now in a position on the platform to aggregate everything that concerns an enterprise or an individual dating back to 20 year, 30 year, 40 year. He generates information from tax record, GST record, social platform, newspapers, whatever. So where your name figured is known to them, even though it might be on some remote island. So they are using it in a big way for analysis as also for risk analysis. Then tax professionals have started using it, even in our own office as well. We try to make use of it. Not that we depend on it, but for the purpose of a cross-check, I think it's helping me. It can help me on a research as well. Similarly, it can help a taxpayer in the preparation of the submissions that he makes. Those submissions can be tailor-made to the specific facts of the case because the data is available with the artificial intelligence. They are using it for filing return of income, the CBCR reports, and if they have to comply with Pillar 2, which the EU countries have to do, it would have been, I think, extremely difficult for them to comply had it not been for technology.
Interesting. I think we are perhaps the generation which has witnessed maybe, as they say, one or two industrial revolutions in the form of, let's say, going from a typewriter to a PC to a laptop and now the mobile phone. Looking at the decade ahead, what do you believe would be some of the challenges which people could anticipate and maybe come across? And finally, the most important part, I think, is how should people prepare for those challenges? Governments or maybe businesses, and most importantly, professionals.
Yeah, okay, so let's look at one illustration of a challenge, one illustration of a trend, one illustration of a concern going ahead as we may look at it. But before I comment, I think you reminded me of that Remington typewriter, and that used to be one of the biggest assets in the balance sheet of a professional 5 decades back. Right? Now, the challenge which I see going ahead is what we partly discussed. We discussed about finding ways by which we can break the ice between developing countries and developed country. How to collect taxes is one of the areas where our challenge is persisting. People thought we have been able to find some solution to digital economy. We can neutralize it to an extent by introducing certain enactments. And with the atmosphere prevalent in US today, unless if there is some relent over a period of 2 or 3 years, we find that the countries are struggling as to how to find their sources of finance.
Right.
People today cannot do because US not only says that don't collect taxes from us, they say that if you collect tax in the name of IIR or UTPR in any other country, then we will be retaliatory against the companies which are collecting and levying those taxes. So that's a dilemma that we have. One interesting trend, or maybe a couple of interesting trends, could be that there is too much of emphasis being laid on compliance and information gathering.
Right.
Every country wants to aggregate information and to aggregate the compliance. You comply. What we do is a different thing. Maybe we accept your returns as they are, but your compliance should be a very meticulous and a detailed compliance. The second trend which is emerging, which could be an advantage or a disadvantage, that the future of tax is more with the politicians, in the sense that 137, 139 countries could come together, and they said that this is what is to be done. So on a top-down approach, we find that mandate is given to the tax authorities that you don't have to conceive anything, see to it that you find a solution to this.
Right.
So that geopolitical pressure could be one of the trends which more and more you will visualize.
Right.
And the concern that I look at it from a taxpayer perspective is that in the world of international tax, a meaningful M&A, and we may not restrict only to FANG enterprises, but refer to countries looking at different enterprises of a smaller size as well. Now, concern is that my data is spread all over the globe. My CBCR, for example, is circulating. A person who is going to assess me in one of the far-fetched countries where in a single year I may have operations, he might, out of curiosity, have a look at the global data and the way I have taken certain positions in different countries, etc. So there is a likelihood that each country may take a different view with regard to the tax collection issue which is before him. There could be, therefore, I suspect cases of double taxation in different countries.
Maybe even multiple.
Yeah, that's true. So I will be left to litigate in different countries
Right.
to seek a refund of the excess tax which has been paid. So as a tax professional, I think I would be happy if the countries say that if you were to face such litigation, it will be sorted out at the country level. I don't ask you to deposit tax again in a second country, but let it be a matter to be sorted out between the countries. I know I have deposited tax to the extent of, say, 25%, 30%. Now, beyond that, don't pressurize and recover taxes from me. You borrow the litigation.
There should be a government-to-government resolution
That's
for the
true.
fair allocation of whatever you have deposited.
Correct. I don't know if that can happen. But that's what a wish list for me would be.
Thank you very much, Pinakin Bhai.
Thank you so much.
It's been a pleasure talking to you. Thank you, viewers. This was part of the Are You Aware series of the Bombay Chartered Accountants Society. We hope you enjoyed. Do give us your comments and feedback of how we can improve this series. Keep watching. Thank you.